Hi traders! In this video, we'll go through counter trend trading. You'll find out how to open such trades, how to exit them in time, and when it's better to stay away from trading against the trend. Before we get to the actual interesting stuff, have you subscribed to the channel? Do it now to get more educational and analytical videos for traders. One, there's a lot of evidence that trading in the direction of a trend increases the odds of having a successful trade. So why do we even consider trading in the counter trend? Well, the problem is that when we open the price charts, the market is not necessarily at a point when the price is about to make a big move in the line with the existing trend. So we may not be here, but here. And you want to make trade now and see the potential for a counter trend move. So you trade. 2. So you think that the price will make a correction. To enter a trade counter the trend, you need to have several signals. Let's go through them. First, the price should form a high in an uptrend or a low in a downtrend. That's the number one thing you need to trade a correction. Second, watch for the so-called divergence between the price chart and indicators. When the indicator doesn't confirm the price is high, the price will have to go down to get in line with the indicator. I like using Awesome Oscillator. You can add it to MetaTrader by clicking Insert, Indicators, Bill Williams, Oscillators. Third, draw trend lines. When trend lines prevent the price from going further in the line with the trend, this hints that the price may move in the opposite direction. Finally, try to spot reversal candlestick patterns. This guide shows that at least a very small scale, short-term reversal counter to the main trend is likely. Look for shooting stars and bearish engulfing patterns in uptrend, and hammers and bullish engulfing patterns in downtrends. The more of these signals are in place, the more reliable a counter trend idea is. 3. It would be unwise to enter the counter trend trade at any time. If in a downtrend the price is falling and hasn't formed a low yet, it would be bad to enter with a buy trade. This would be what they call catching falling knives. You don't want to catch a falling knife with your bare hand. Just like that, you wouldn't want to buy when the downtrend is still on. So, trends should make a stop. You may see that the chart has stopped looking at candlesticks, shooting stars again, or finding a top on a smaller time frame. If the trend is actively continuing, forget about your counter trend trading ambitions. 4. Closing a trade at the right moment is equally important. Remember that counter trend moves, corrections, are small. There's just not much space between the trend lines. So don't be greedy. A smaller take profit is better than a bigger one. In an uptrend, place a take profit above support. In a downtrend, below resistance. Stop loss should be rather tight. If the price is not moving in your favor, this trade is no point. Second, remember the risk-reward ratio from 1 to 3 to 1 to 5. That's it. Was this information useful? Please share in the comments.